Hello and welcome to CMC Markets Trading Outlook for the week of February the 15th, 2016. My name is Colin Szynski, Chief Market Strategist. Our focus this week is on the currency and energy wars that continue to unfold and continue to rock the markets. I'll also talk a little bit about China data this week too. We start off the week with a holiday, and for markets in a way a bit of a well-deserved breather. We've had some hugely volatile weeks the last couple of weeks, and a lot of big things have been happening, and heading into this long weekend, we've had a huge big turnaround for stock markets and in particular for crude oil. So I'm going to talk a little bit about some of the forces that are driving markets. The week itself is slower, especially with the holiday on Monday plus the end of earnings season. The main developments this week, we have FOMC and ECB minutes, so no decisions but just more rehashing of the last meetings. And in terms of earnings, things have quieted down, but we do get a number of reports from miners as well as from retailers. The retailers could be particularly significant, and really their guidance in particular, because what we'll be looking for to see is if they're seeing any signs of consumer spending picking up in January or February with the lower gasoline prices. Speaking of which, I'll just start off here with energy. We've had a massive sell-off in crude oil over the last few months, but it's now starting to look like we're getting close to a bottom here. Look at this. We had a low here around 26.60. We had a retest. We dipped below it and held up. That's a hammer candle there. That's also a bear trap. On top of that, that coincides with a positive RSI divergence. All signs that suggest the selling is getting exhausted. Momentum, downward pressure starting to ease, and momentum starting to turn up. This particular low here coincided with that big, massive $50 rally in the gold price. You'd think on a day like that crude oil should have, on that breakdown, should have taken out 25 and been well on its way to 22. Instead, it held 25 and it started to bounce. And here on the Friday, 7 to 10% gain. Boom, huge turnaround here. I think a lot of this is short covering ahead of the weekend. We'll probably see it digest in the near term, but it does look like we've put in a significant low here and are starting to turn higher. What's changed in crude oil? Well, we've had a number of things. I'm recording this just after the U.S. drill rig count came out again. It's down another 30 rigs. Exploration has really dropped off in the States. All the companies, energy companies I've seen reporting this week, some of the big ones have been cutting capex budgets again. Exploration is slowing. What does that mean? Oil wells naturally decline over time. If you don't explore enough to replace that declining production will just decline on its own without anybody actually even having to shut in wells. So we're seeing a point where U.S. production could start to decline in the coming months. Meanwhile, there's been more chatter about possible cooperation between, first of all, within OPEC and then between OPEC and other countries. There's been talk from some of the Gulf states that they might be willing to cooperate. There's been talk that Saudi Arabia and Russia might be willing to chat. But the most important one is the negotiated truce in Syria. If this actually holds, could be very important, because I've been thinking for months now, how is it even possible that any of these countries, Iran, Russia, Saudi Arabia, the United States, the big four, how are any of them going to sit down and talk seriously about getting the oil market under control when they're fighting a proxy wars against each other in Syria and Yemen and they're in other places? As long as, when they're not even getting along on the political side, how you think they'd get along with enough to stabilize oil was beyond me. But if we actually did start to see some stability come back, we could then go to the next stage where maybe they can start to talk about what to do about the oversupply in the oil market. So that's still a long way off, and as we know, we've seen these rumors come, we've seen these rumors go. But for now, at least technically though, we've had the technical washout, and now we've had an excuse for a rally. Our initial upside for crude is $30 for, and then about 32.35 to 32.50 on a rebound for WTI. I'll just show Brent as well quickly here. And Brent also, we're seeing much higher low. And look at this. The first low was down around 27 and a quarter. This one here, 2-3 dips below $30, all pushed back up. So we've definitely got stronger support here coming in at 30. The not as oversold, but it is kind of going sideways here around 50 on momentum. Next upside resistance around 33. Then that's about 35 and a quarter. Base building appears to be forming in Brent as well. So that could be quite significant too. The next thing I wanted to talk about was what I'm calling the unfolding currency war, and we've really seen it play out across a number of markets in the last week, and it could continue this week. There's a number of Fed speakers, and there are some minutes out from the ECB and the FOMC for people to chew on, and basically what it's all centering around is the U.S. dollar and the U.S. dollar index, and it's played out in a number of different ways. But what we've seen here is that the dollar index peaked above 100 last fall. When the Fed raised interest rates, it still didn't get back above it, and now we've seen it start to tumble since the beginning of February. What's been happening? Well, there's a number of things going on with different central banks. Right at the end of January here, and another failure at 100 was that the Bank of Japan went to negative interest rates. And this is really interesting because I'll show it on a chart in a minute or so, that instead of you think that the yen would have gone down, instead it's gone up. And what's been happening in the last month? Well, we've seen since the beginning of the year, sterling has weakened. Why? Because the Bank of England has backed away from raising interest rates this year. U.S. Has also started to weaken. Why? Because it's looking like the Fed may not go to 4 interest rate hikes this year as had been expected and priced in. It could be 2, it could be none. We'll wait and see. And a lot of Fed comments this week were particularly interesting, and I focus early in the week we had dovish comments out, and last week from previous weeks from people like Governor Vice New York Fed President Dudley, from Vice Chair Fisher, from Governor Brainerd. They've all been kind of backing away from the 4 rate hikes, and we've seen the dollar start to come down as they've done this. This week the week that's just ending here, we had testimony from Fed Chair Yellen. She's walking a tightrope. Her thing is that if she goes too hawkish, then that could send the U.S. dollar soaring, and she doesn't want that, because what was the one theme we've seen coming? One of the big themes we've seen coming out of earnings season. Companies in the U.S. are really getting hit by the higher dollar. It impacts their overseas earnings coming back. It impacts their ability to export, and so it's been the rising U.S. dollar has been a real drag. The Fed really doesn't want the dollar to go up anymore, so she can't talk too hawkish. But at the same time, if she was to talk too dovishly, she could crash the stock market, because unlike in the past when people said, well, bad news was good news for liquidity, now they're saying, well, bad news is bad news for the economy. Bad news for the economy is bad news for corporate earnings, and when we get bad news, stocks have been going down. So it's a real problem, and she's been managing this tightrope as best she can. So Wednesday, she came out and was as neutral as she could. She defended the rate hike, suggested they could do more, but at the same time kind of backed away from this previous commitment to 4 hikes, and just kind of said, yeah, we're just keeping an eye on things for now. Then, on Thursday morning, the Riksbank in Sweden came out and they cut their rates even deeper into negative rates. So I guess Yellen felt the need to send the message to central banks that the Fed was not going to take this sitting down, and that the central banks can't just, everywhere else can't just keep going deeper into the negative and expecting the U.S. to pay the price for that. So she came out and then started leaving the door open to negative rates. And what was interesting was then Thursday night, we had Governor Kuroda of the Bank of Japan and Japanese Prime Minister Abe sitting down and having a talk to what to do about the soaring yen, and there was some rumor that, well, maybe they could cut rates again, and they didn't, which suggests that at least they seem to be, the word seems to be getting around that the Fed's not going to tolerate other people devaluing their currency at the U.S. expense. So keep an eye on that. And then here on Friday, we've had Governor New York Fed President Dudley come out again and saying, yeah, it's premature to really speculate on negative interest rates. So I think what we're looking at here is that threat of negative rates has been out there to kind of try and tell the other central banks to cool it, and at the same time, though, the Fed is trying to keep their options open, where they may still raise. The economy is probably going to be good enough for them to raise rates in March, but markets have been volatile. Will they do it or won't they do it? That's still going to be a big factor driving trading over the next few weeks and months. So I've looked here at the dollar index. This seems to be stabilizing for now. It's gotten a touch oversold. We could see it level off near 96. I think in time you're going to probably see it continue to drift back into like 95 or the low 90s. Next currency I wanted to talk about was dollar yen, and some of the things that have been going on with that. So the in particular dollar yen. So back here, this big spike was when the Bank of Japan went to negative interest rates. And what did we have? Look at this morning star here. Oh my gosh, that is really something. Right, big up day, a neutral day where it did get a little higher, and then kaboom. And then one, two, three huge down candles, a pause. One, two, three, four, another huge. And then look at this. Now we've got a bullish, almost a bullish engulfing day here. It's starting to turn back up. And this was after this big plunge down to 111 and this drive back up. There's been speculation that maybe this move here was the Bank of Japan intervening in the market. The government's kind of been denying it, but nobody's really said much, which makes me wonder. Sometimes when there's smoke, there's fire. Regardless, we're overbought here, getting due for a bounce back above 113. Next resistance here, 114.20, and this one here, 115 to 115.20 zone in here. So it wouldn't be surprised we could see this spike back up into the 115 area on the yen. And as I said, this move up here is after there had been speculation that maybe they would. Maybe the Bank of Japan would cut interest rates again to stop this, because this plunge here is appreciation of the yen, and instead we've seen it start to go back the other way, the way that actually they'd prefer it. So it still looks like the yen could be quite an active market. And, of course, with the volatility in all the other world markets, what also would happen, US dollar had been the haven of choice in 2015, but it's gotten really expensive relative to everybody else. People were looking for cheaper havens, found it in yen, they found it in gold, and those things have been soaring. And now I'm going to show what's been going on with the gold price. When I talk about havens, look at this. This is... When I say a market going parabolic, this is what I mean. Look at this. Just from flat, steady, and then the momentum just up, 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 and then straight up to a huge spike. Look at that. That is an incredible pattern there. Big breakout from a big long-term downtrend here. And so gold generally is looking good. As I've mentioned that I think gold, US dollar could continue to decline. Gold has the potential to continue to rebound here. So it's had a huge run, though. It had a $50 move upward in one day. Like, wow. Up here about 1260, though, it's run into some resistance, started to drop back. Next resistance, Fibonacci cluster, 1280 to 1300. However, before you see that, I think you might see a retest of 1200 back here. RSI extremely overbought. It's when you get that high, it doesn't take much for it to push over and turn back down the other way. So that is another market there that has the potential to continue to be quite active in the coming week. There's a lot going on with gold. Demand has been picking up, even though some central banks have been selling, some central banks have been buying, and there's been more investment demand with the price starting to come back around again. So there's still a lot of reason for a lot of trading interest to continue in gold. I'm just going to wrap up here with a few quick chart analyses, and then we'll go from there, and then I'll wrap up. So I just wanted to start here. I wanted to talk a bit about sterling in particular. Sterling also has been bouncing back. This market was really oversold here, but we'd had a low. It's started to come up here. It's hanging around this Fibonacci cluster around 145 RSI and 50, digesting the first wave up in between 143.50 and 146.50. That's the 50-day moving average there. But what's really interesting about sterling is how it's acting relative to the euro. And if I bring up euro pound here, we'll see that this looks like it might have peaked. We've had a big uptrend in euro relative to the pound. Why is that? Because, well, back here in December, the euro didn't go as dovish as people thought, and here the UK has stopped being as hawkish as they were, and so we'd had this euro pound driving up. But look at this. We had this big spike up, failure at 79. It's starting to come back. Bearish engulfing here. Negative divergence on the RSI. No non-confirmation. And this is telling me that this market it's probably peaked, could start working its way back down. The next one I'll show is euro dollar. Euro dollar is another market here that had a big run up, and it also looks like it's starting to level off. Another example, not quite an evening star, but kind of close. I mean, we've had a kind of a run up here. We had this big long hanging man here, then we had this, and now it's starting to roll back over again and overbought on the RSI. So we could get a bit of a correction in euro dollar of its recent gains. And finally, I'm just going to show dollar CAD. Dollar CAD with oil pricing recovering, dollar CAD has the potential to continue trending lower here. We had a big initial sell-off here. I had talked about at the time that when crude oil broke 26.60 and started to go down, not only did it not go down very far and not break 25, but the Canadian dollar didn't, US dollar CAD didn't spike. The loonie didn't crash. That was a big non-confirmation as well. That also suggested people were starting to think the oil price done. Look at this. It's fallen. It's had a coming in resistance. There's a 50-day moving average, Fibonacci cluster, and round number all in and around 140. Holding below that, starting to work its way downward again. First support about 138.13. This Fibonacci here is about 137.50, and this low here, a retest, is about 136.30. RSI also holding below 50, confirms downward momentum off this massive double top back here. We continue to trend lower in dollar CAD. And I'm just now going to wrap with a couple of index comments. The first one I'm actually going to talk about is the Japan 225, the Nikkei, which tracks the Nikkei. This one here, look at this. Bust below 15,000 and now coming back up. That's a bear trap. That's a bullish key reversal day and looking really good. Plus oversold on the RSI, regaining quickly of a round number here. This suggests a big washout. If the yen's peaked and starts, a lot of this plunge was mirrored by the yen going through the roof and the 225 going through the floor. The yen starts to come back down. This can start to come back up. I'll also quickly here look at a couple of the U.S. indices. NASDAQ 100 I wanted to show here. This was also an important technical turn here. Look at this. We had the retest of the August lows, dipped below it, didn't stay very long, turning back up. We've now got a double bottom in here at 3,900, and for a bit it's actually been trying to peak back above 4,000. If it starts to move meaningful above this, next is about 40.80. Positive RSI divergence, positive higher lows, oversold, you name it. This looks like it could be ready for a bounce. And similarly, we'll show the UK 100. Same sort of thing. Look at this. It broke here, and it's come roaring right back. So this here, and look, a big non-confirmation here. Positive RSI divergence. Bounce off 5,500, back up towards 5,700, and looks like this one might be washed out as well. The final one I'll take a quick peek at here is Germany. And what we're seeing here, this one doesn't look quite like it's ready to go yet, but at least it looks like it's stopped falling for now. The question is this a pause in it before another down leg, or is this actually a base forming? Well, we've got a couple of dojis here. We've got a hammer, and it looks like it wants to build a base. Oversold RSI, uptick here suggests downwards pressure is easing, but really it's got to get back above and hold 9,000 to signal an upturn for the DAX. If it does here, it's 91.30 to 40, and then this one here is more like 93.50. So we're still, even though there's a lot less news this week, we're still seeing a lot of trends going on in the market, a lot of counter trends going on in the market. It looks as though the moves we've seen over the last few weeks might be nearing exhaustion, and we're getting ready for a trend reversal. Regardless, it looks like we'll see a lot of volatility and a lot of trading opportunities this week.